Welcome back to Investing Talk Podcast.
Today, we're looking at Terrestrial Energy, a company at the forefront of the nuclear energy renaissance.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave in the comments below.
So let's get into the analysis. This is a fascinating story because we're looking at a Generation AVI nuclear tech company.
Right.
And they just went public. It was late October 2025 after a SPAC merger. So this transaction basically makes them a pure play investment on, the next wave of clean power.
Okay, so let's unpack that. We're talking about a classic pre-revenue play here.
Oh, totally.
Which means the focus is entirely on hitting those deployment and regulatory milestones, not on current sales or margins. The stakes are huge. So what's the tech? What are they bringing to the table that's so cutting edge?
Their main advantage, their primary edge, is this proprietary technology called the Integral Molten Salt Reactor, or IMSR for short.
IMSR, got it.
And this isn't just a minor tweak on old tech. This is a major generational leap forward. The real insight here is that molten salt reactors operate at ambient pressure, or very low pressure.
Okay, and that's a huge deal compared to traditional plants.
A massive deal. Think about legacy pressurized water reactors. They need these enormous, complex containment buildings and high-pressure systems just to stop a meltdown. The molten salt design it gets rid of a lot of that complexity.
So the safety is inherent to the design itself.
Yeah.
That should simplify the regulatory stuff and, I assume, cut the actual cost of building the plant.
That's exactly it. The fuel is already liquid salt, and it uses passive cooling. So if the power goes out, the reactor literally cools itself down without anyone needing to flip a switch.
Wow.
It makes the whole design inherently safe and smaller. That's the small modular reactor part of it.
Right.
And crucially, it's built for dual use, so it provides both industrial heat and electricity. Each plant is rated for 822 thermal megawatts or 390 electrical megawatts.
That dual-use part sounds like a key differentiator. Providing industrial heat opens up markets that nuclear has never really been able to touch before. Refineries, chemical plants, maybe even large-scale hydrogen production.
For sure, it gives them a much wider market to play in. They're not just selling electrons back to the grid, they're selling a complete carbon-free energy solution to heavy industry.
That puts them in a pretty strong position against competitors then, people like NuScale or GE Hitachi.
It really does. They can tap into this industrial heat market that, traditional nuclear just wasn't efficient enough to service.
Okay, but speaking of execution, a pre-revenue company on a, let's face it, decades-long deployment curve needs a serious amount of cash. How solid is their financial footing after this merger?
It's pretty solid. Their balance sheet got a significant boost from the SPAC deal. They pulled in roughly $280 million in gross proceeds.
Okay.
That was made up of a $50 million private investment in public equity,
Yeah.
the PIPE, which was priced at $10 a share, plus the cash left in the trust.
And that $10 PIPE price is so important. It's like an institutional floor. It shows you what this smart money was willing to pay to get in on the ground floor. What about redemptions, though? That's where these SPACs can fall apart.
That was the best part. They had minimal redemptions, only about 7,390 shares, which is a fantastic signal of investor confidence.
It is, but let's push back on that 280 million number. It sounds like a lot, but for a nuclear development project,
Yeah.
that can burn fast. We're talking billions for the first plants. How many years of runway does that actually buy them?
That's the million-dollar question you're right to ask. That $280 million is enough to fund their current regulatory work and the initial engineering for the next few years.
Okay.
Right now, their free cash flow is negative, so it's all about strategic reinvestment into hitting those milestones. But the clock is definitely ticking. Investors will be watching their cash burn very closely in the Q4 earnings report, which should be out in February 2026.
And that cash is critical because the whole story hinges on them hitting those regulatory targets. So where are they in that race? And why is Canada so important here?
This is where it gets really interesting. They already have a significant lead. They completed the Canadian Nuclear Safety Commission's Vendor Design Review, the VDR, all the way back in 2023.
And that's not just a rubber stamp, right?
Not at all. It means Canada's top nuclear experts have basically greenlit the fundamental design of the IMSR. It was the first for any generation to feed molten salt technology, giving them a huge first-mover advantage.
So they've essentially de-risked the core concept with a major global regulator. That lets them leapfrog competitors who are still in those earlier, more theoretical stages.
Precisely. And they're also working in parallel with the U.S. Nuclear Regulatory Commission, the NRC. They've been engaged with them since 2016, which helps streamline the approval process across North America.
Okay, so they've got regulatory momentum, the paperwork is moving, but paperwork doesn't pay the bills. The real question is there any market validation? Is anyone actually lining up to buy these things?
There is. They secured a major win back in February of 2025. Texas A&M University actually selected their IMSR plant in a competitive request for proposal.
That's interesting.
It is. It shows there's real demand and, more importantly, confidence that this technology can actually be deployed on a reasonable timeline.
A university project is good validation, but it's one project.
Yeah.
How can we be sure that this translates into fleet orders from, really conservative industrial buyers?
It's a valid point. But this wasn't just some research project, it was a competitive procurement win. It shows that major institutions believe the tech is ready to move from the lab to the real world. That said, you're right, the real test is landing that first full-scale commercial deployment. That's the bridge to getting those fleet orders.
Let's pivot to the stock itself. It only started trading on October 29, 2025, so the price action is still really fresh. What are you watching for on the chart?
Well, we're seeing the shares start to settle into a potential basing pattern after that initial post-listing volatility. And like we said, that $10 PPE price is the key support level to watch. That's where the institutions got in.
Right.
Any movement that suggests accumulation ahead of news, like if we start seeing a pattern of higher lows, that would be a really strong signal that momentum is building.
And we talked about institutional interest. Are we seeing any insider movement to back that up?
We are, yeah. Post-merger, we saw some Form 4 filings, specifically one from Frederick Buckman on December 22, 2025. It suggests there was a cluster of insider buying.
Which is always what you want to see.
Yeah.
Management putting their own money on the line.
Exactly. It shows they're confident, especially when you already have that strong institutional support confirmed by the low redemptions.
So if we zoom out to the bigger picture, what are the macro tailwinds here? What's helping SMRs like this one right now?
I mean, the macro picture for clean, reliable power has honestly never been stronger. The massive surge in demand driven by AI and data centers is the #1 catalyst.
It's incredible. Every week, there's a new hyperscale data center announced that needs a small city's worth of power.
And they need firm, clean, baseload power. Electricity that's on 24/7, whether the sun is shining or the wind is blowing. SMRs are perfectly positioned to deliver that.
Right to the source, too. You could almost co-locate them.
You absolutely could. And beyond that, if we do see interest rate cuts in the future, that would be a huge tailwind for capital-intensive projects like building out a nuclear fleet.
Okay, we've covered a lot of the bullish points. The tech moat, the regulatory lead, the $280 million in cash, the AI demand. It sounds compelling.
Okay.
So what's the bear case? What are the biggest risks that could derail this thing?
The primary risk is always going to be regulatory delays. I mean, it's a nuclear project. While they have the Canadian VDR complete, the full NRC licensing process in the U.S. could easily slip their timelines.
It's just the nature of the beast.
It is. They've been talking to the NRC for years, but delays are almost a given. The market seems to be pricing some of that in, though. The pre-money valuation of $925 million is actually a bit of a discount compared to its SMR peers, which reflects that risk.
And what about internal risks? Execution risk. Merging companies can be messy, and the supply chain for nuclear-grade parts must be incredibly complex.
It is. There were some small signs of integration challenges, like the dismissal of their previous auditor back in November 2025. But the real challenge is scaling up. The supply chain for nuclear-grade components is tight and has long lead times. Managing that entire pipeline while you're burning through that cash buffer requires flawless execution.
So we're watching the cash burn and we're watching the regulatory milestones, recognizing this is an infrastructure play measured in decades, not quarters.
Exactly. This is fundamentally a multi-year hold. You're betting on the transition from a speculative pre-revenue company to a full-scale fleet deployer. The molten salt tech and their regulatory head start gives them a first-mover advantage, and they have the cash to pursue it.
So at the end of the day, you're looking at a company that is uniquely positioned to capitalize on this global need for carbon-free, scalable energy. But it all hinges on them hitting those crucial milestones. The real tension here is whether they can industrialize this process fast enough to meet that surging AI demand before their cash runway gets too short. That's what makes this such a compelling story to watch.
Make sure to subscribe to Investing Talk podcast for our future analyses on energy and technology. We'll keep tracking the progress of SMRs like this one.